The BTC-USD chart for November 15 to 16, 2025, shows that the price initially rose to nearly $96,800 on November 15 before experiencing a significant decline. On November 16, the price fell below the $95,000 level and continued to show signs of weakness. BTC-USD price analysis to November 16, 2025. Initial movement. The price started around $94,420 on November 15 and quickly moved upward, reaching a high of approximately $96,728 by around 8:15 p.m. Coordinated Universal Time that day, as seen in the chart. Price drop. Following this peak, strong selling pressure took hold, pushing the price lower, eventually breaking down below the significant psychological support level of $100,000 on a daily scale and below $95,000 on the 15-minute chart. November 16. The price action on November 16 was marked by lower highs and lower lows, reinforcing a short-term bearish trend. The price traded in a range primarily between $94,930 and $95,961 for the day. Volume. Volume was volatile, peaking during the initial surge on November 15 and during the subsequent sharp drops, indicating active trading during periods of high price movement. The general market sentiment for Bitcoin during this period was described as one of persistent selling pressure and structural weakness across major cryptocurrencies. Based on the price action shown in the chart and news from the time, market sentiment for Bitcoin on November 15 to 16, 2025, was one of extreme fear and a persistent bearish outlook. Key news sentiment drivers. Macroeconomic pressures. The primary driver of the negative sentiment was the broader macroeconomic environment. Fading hopes for an imminent U.S. Federal Reserve interest rate cut led investors to retreat from high-risk assets, including Bitcoin. Risk-off environment. Bitcoin has a positive correlation with equities, and a general, risk-off, sentiment in the stock market translated directly into hesitation and selling pressure for crypto assets. Government shutdown uncertainty. The end of a U.S. government shutdown offered little relief to market confidence as the deal was seen as temporary, leaving underlying political uncertainty and regulatory ambiguity in place. Institutional selling. Both long-term holders and institutional investors showed signs of waning interest, with significant outflows of Bitcoin from exchanges and slowing ETF inflows, further amplifying the sell-off. Technical breakdown. The price action breaking below the psychological $100,000 level and a key long-term moving average signaled a strong technical breakdown, leading trend and momentum traders to adopt a short, or bearish, position. Extreme fear index. The crypto fear and greed index plummeted to a score of 10, signaling extreme fear, a level not seen in months, indicating widespread investor pessimism. The overall sentiment was that while some technical support existed around the $94,000 level, the short-term bias was bearish, with a risk of further drops toward the $90,000 to $87,000 range if support failed. The image displays a BTC USD 15 meters candlestick chart with an ATR average true range indicator, which is a common setup used in cryptocurrency day trading to assess market volatility. The data shown is from November 15 to November 16, 2025. Chart overview. Asset: BTC USD Bitcoin versus US dollar. Timeframe: 15 minutes. Each candlestick represents 15 minutes of price action. Price range: the chart covers a price range for Bitcoin between approximately $94,800 and $96,400. Historical data for this period shows a general price range consistent with these values. Indicators: it includes volume bottom histogram and the average true range ATR line lower panel. Analysis. Price action: the price shows a general uptrend from November 15, 1530 to around November 15, 2030, where it peaked near $96,400, followed by a decline and consolidation phase. It begins to trend upwards again toward the end of the chart period, nearing $96,000. Volume: the volume indicator shows periods of high trading activity, particularly around November 15, 2030, which corresponds to the price peak and subsequent drop. Average true range ATR: the ATR measures market volatility. Hollow bullet: the indicator line is a red, curved line in the lower panel. Hollow bullet: a higher ATR peaks in the line indicates periods of increased price movement or volatility, such as during the peak around November 15, 2030. Hollow bullet: a lower ATR dips in the line signifies periods of lower volatility or sideways price action. The value on the right axis indicates the average range in dollars. This type of chart is primarily used by day traders to capture short-term trends and manage risk effectively by setting stop losses based on current volatility. Disclaimer: this response is for informational purposes only and does not constitute financial advice. Cryptocurrency trading is a high-risk activity. Which time frame is best for intraday trading? Kotak Securities. The 4th of September 2025, 15-minute charts can support momentum trading. These time frames offer a balance between speed and clarity. They help Kotak Securities. How to use the ATR indicator, average true range, Tradiciety. The 22nd of March 2023, it's pretty easy, though, as we will see. ATR stands for average true range, which means that the ATR measures how much. Tradiciety. What is average true range ATR and how to use it for trading? The 23rd of February 2021, the average true range is an oscillator-based indicator that measures the market volatility. The ATR can be applied to Bybit Learn. The news sentiment for Bitcoin during the period shown in the chart November 15 to 16, 2025 was overwhelmingly negative, in a state of extreme fear. The price chart in the image reflects this sentiment, showing high volatility and a significant price correction. News sentiment summary. Extreme fear. The Bitcoin Fear and Greed Index crashed to 10, the lowest level seen since the March 2020 COVID meltdown, indicating widespread panic among investors. Price drop. Bitcoin sank below the $95,000 level to a 6-month low, marking an official bear market, with a decline of over 20% in barely more than a month. Macroeconomic pressures. The sell-off was attributed to a general risk-off sentiment across markets, with investors reducing exposure to volatile assets amid speculation that the U.S. Federal Reserve would delay interest rate cuts. Liquidation and outflows. Over $1 billion in leveraged positions were liquidated, amplifying volatility. This was compounded by record high selling from long-term Bitcoin holders and significant redemptions from Bitcoin exchange-traded funds (ETFs). Chart reflection. The 15-minute chart captures this turbulent period. Price volatility. The rapid price movements and long wicks on the candlesticks, especially around November 15, 2030, reflect high volatility and uncertainty driven by the circulating negative news. Selling pressure. The overall downward trend in price, particularly the sharp drops, aligns with the news of heavy selling pressure, massive ETF outflows, and profit-taking by long-term holders. Volume spikes. High volume accompanied the sharp price movements, particularly during the peak and subsequent drop, confirming strong market reaction to the negative news flow. The image provided is a BTC/USD 15-minute candlestick chart with Bollinger Bands (BBANDS) applied. This is a common tool used in financial technical analysis to gauge market volatility and identify potential trading opportunities. Understanding the chart elements. Candlesticks. The red and green bars show price movement over 15-minute intervals. Green candles indicate the price closed higher than it opened, while red indicates it closed lower. BBANDS. These are composed of 3 lines. Hollow bullet BB middle white line, a simple moving average SMA, typically a 20-period average, representing the average price over the last 20 candles. Hollow bullet BB upper orange line, the middle band plus 2 standard deviations, often acting as a dynamic resistance level or indicating an overbought condition. Hollow bullet BB lower orange line, the middle band minus 2 standard deviations, often acting as a dynamic support level or indicating an oversold condition. Volume bottom panel, the bars at the bottom show the amount of trading activity for each 15-minute period. High volume can confirm the strength of price movements. Time frame. The chart covers a period from approximately 3:30 p.m. on November 15, 2025, to 11:30 a.m. on November 16, 2025. Market observations and potential signals. Based on common Bollinger Band strategies, several observations can be made. Volatility contraction squeeze between approximately 1:30 a.m. and 6:30 a.m. on November 16, the upper and lower bands narrowed significantly. This squeeze indicates a period of low volatility and often precedes a significant price move or breakout. Price action after squeeze. After the squeeze, the price broke decisively above the upper band around 11:30 a.m. on November 16, accompanied by a spike in volume. This suggests a potential strong bullish upward trend is beginning. Overbought, oversold conditions. Before the squeeze, prices bounced between the bands. A sharp rise around 8 p.m. on November 15 touched the upper band, potential overbought condition, followed by a retreat toward the middle band, mean reversion. Market sentiment surrounding Bitcoin (BTC) was extremely negative and in extreme fear territory during the timeframe of the chart November 15 to 16, 2025, which aligns with the price instability shown in the image. News sentiment summary November 15 to 16, 2025. Extreme fear. Major financial news sources reported that crypto market sentiment had plummeted to its lowest level since the COVID-19 pandemic meltdown, with the Fear and Greed Index hitting a score of 10. Price decline. Bitcoin had recently failed to hold the psychologically important $100,000 level and had sunk to a 6-month low of around $95,000 as risk-off sentiment pervaded global markets. Macroeconomic headwinds. The prevailing market weakness was linked to broader macroeconomic concerns, including reduced confidence in the Federal Reserve cutting interest rates and institutional investors pulling money from risky assets. Analyst outlook. While some analysts noted that extreme fear can sometimes precede a short-term rebound, the immediate backdrop for Bitcoin was widely considered bearish, with a strong focus on potential downside targets if key support levels failed. Correlation with the chart. The information in the chart, which shows high volatility and prices fluctuating in the mid-$90,000 range, corresponds with the external news reports of panic, significant selling pressure, and market instability during that specific time. The sharp upward move at the end of the chart could represent a technical breakout that occurred despite the overall bearish news sentiment. The image provided is a BTC USD 15-minute candlestick chart with an EMA 14 indicator, charting price and volume action between November 15 and November 16, 2025. Technical analysis of the chart. The chart illustrates recent volatility in the Bitcoin price, with a sharp drop followed by a rebound. Price movement. Bitcoin was trading around $96,000 on November 15, experienced a significant drop below $95,000, and has since rebounded back toward the $96,000 level as of the end of the chart period 11:45 Coordinated Universal Time on November 16, 2025. EMA 14 Exponential Moving Average. The EMA line, light blue, follows recent price movements closely. Hollow bullet. The price crossed below the EMA during the downtrend, indicating a strong sell signal at that time. Hollow bullet. The price is now crossing back above the EMA line as it rebounds, which can signal a potential shift in short-term momentum to the upside. Volume. The volume bars show significant selling volume during the price drop on November 15, tall red bars around 2045, and a recent increase in buying volume, green bars, accompanying the price rebound on November 16. Market sentiment. Broader market analysis indicates strong selling pressure persists, with sentiment shifting from euphoria to extreme fear among short-term holders, many of whom are underwater on their investments as prices recently fell below the key $100,000 support level. Based on recent news sentiment analysis around the time frame of the chart November 15 to 16, 2025, the market sentiment for Bitcoin was extremely negative, driven by a combination of price action and macroeconomic factors. News sentiment analysis for November 15 to 16, 2025. Overall sentiment: extreme fear and bearish. The prevailing sentiment during the period shown in the chart was one of extreme fear, as indicated by a drop in the crypto fear and greed index to a score of 10, its lowest level since earlier in the year. This fearful sentiment directly corresponds to the significant price drop below the key psychological $100,000 level seen in your chart. Key drivers of negative sentiment. Price drop below key levels. Bitcoin had recently fallen below a 6-month low and failed to hold the crucial $100,000 support level, triggering widespread selling pressure. Technical analysts highlighted that BTC broke below key moving averages, signaling a shift in momentum from bullish to bearish. Whale activity and deleveraging. Large investors, or whales, were reportedly selling their Bitcoin holdings in record amounts, contributing to the downward pressure and increased volatility. The crypto derivatives markets also experienced a major deleveraging cycle, reducing forced selling pressure but indicating recent instability. Macroeconomic uncertainty. General risk-off sentiment in the broader financial markets due to macroeconomic uncertainty and the Federal Reserve's stance on interest rates caused investors to move capital away from high-volatility assets like Bitcoin and into safer investments. Retail investor pain. Nearly 99% of short-term Bitcoin buyers who had accumulated over the previous 5 months were estimated to be at a loss when the price fell to the $96,000 level seen in the chart. This condition typically surfaces during market capitulation phases when emotional exhaustion peaks. The chart in context. The sharp red volume bars and rapid price depreciation in the initial part of your chart directly reflect this widespread panic and selling. The slight recovery at the end of the chart period occurred as the market hit these extreme fear levels, which some contrarian indicators suggest might signal a potential bottom is near, though analysts remain cautious about a definitive reversal. The image displays a BTC/USD 15-minute candlestick chart along with volume and a moving average convergence divergence (MACD) indicator. Key components. Candlestick chart top panel. This chart shows the price movement of Bitcoin against the US dollar BTC/USD, where each candle represents 15 minutes of trading activity. Green candles indicate that the closing price was higher than the opening price, while red candles indicate the opposite. Volume middle panel. The green and red bars in the middle panel represent the trading volume during each 15-minute period. High volume often confirms the strength of a price movement or trend. MACD bottom panel. This is a momentum indicator used by traders to identify potential trend changes, momentum shifts, and entry or exit points. Hollow bullet MACD line purple, the faster line, calculated by subtracting a 26-period exponential moving average EMA from a 12-period EMA. Hollow bullet signal line yellow, a 9-period EMA of the MACD line itself, which acts as a trigger for buy and sell signals. Hollow bullet histogram green, red bars. The bars represent the difference between the MACD line and the signal line. Bars above the zero line indicate bullish momentum, while bars below indicate bearish momentum. Chart analysis November 15 to 16, 2025. Overall trend. The price of BTC/USD showed significant fluctuations over the period, moving from around $95,000 on November 15 to a high near $96,500 on November 16, 2025. MACD signals. Hollow bullet around November 16:01:45, the MACD line crossed above the signal line, a bullish crossover as the price was near its local lows, suggesting a potential upward momentum shift. Hollow bullet the histogram bars turned green and grew in height, confirming the increasing bullish momentum leading up to the price rally shown at the end of the chart. Based on recent news headlines around the time depicted in the chart November 15 to 16, 2025, the market was largely driven by extreme fear and negative sentiment. This broader context helps explain the volatility and the strong uptrend observed at the end of the chart period. Prevailing news sentiment. Extreme fear. Market sentiment indicators, such as the Bitcoin Fear and Greed Index, had plunged to their lowest levels since February, signaling widespread panic among investors. Persistent selling pressure. News reports highlighted relentless selling pressure, major outflows from U.S. spot Bitcoin ETFs, and long-term holders selling off a record amount of Bitcoin. Macroeconomic concerns. The negative sentiment was linked to broader risk-off market conditions, concerns about a potential AI stock bubble, and a reduction in expectations for a December Federal Reserve interest rate cut, which tightens liquidity. Technical breakdown. Bitcoin had broken key support levels, including falling below the psychologically important $100,000 mark and the technical $95,000 floor near where the chart begins. Correlation with the chart. The chart provided captures a short-term bullish reversal that occurred despite the overwhelming negative external sentiment. Contrarian indicator. The extreme level of fear in the market is often considered a contrarian buy signal, as maximum panic frequently occurs near market bottoms. Technical versus news. While the news cycle was predominantly negative, The chart's technical indicators, the MACD bullish crossover around November 16, 01:45, and the subsequent price rally suggested that the immediate selling pressure was being absorbed by buyers, leading to the sharp price increase seen towards the end of the timeframe. The chart visually represents a market moment where technical indicators showed a short-term bottom and subsequent upward momentum began to take hold amidst a backdrop of widespread market panic. The provided image is a BTC USD, Bitcoin to US dollar, 15-minute candlestick chart with a 14-period moving average, Massachusetts 14, for November 15 to 16, 2025. Bitcoin price and market action, November 15 to 16, 2025. Price range. Bitcoin traded between approximately $94,012 and $97,411 during this period. Trend. The price was generally in a slight decline, continuing a trend from earlier in November when BTC failed to hold the $100,000 level. Volatility and sentiment. The market experienced significant volatility, and overall investor sentiment was categorized as extreme fear on November 15, indicated by the Fear and Greed Index falling to 10. Market context. The decline occurred alongside an $866 million outflow from Bitcoin ETFs on November 14, one of the worst days ever for the products. This market depth remains thin, risking sharp price swings. Based on news and market data from the period shown in the chart, the prevailing sentiment for Bitcoin was one of extreme fear. Key news and sentiment factors, November 15 to 16, 2025. Risk-off environment. Bitcoin price sank to a 6-month low on Friday, November 15, as investors moved away from risky assets due to macroeconomic pressures and fading hopes for a U.S. Federal Reserve interest rate cut. Extreme Fear Index. The Crypto Fear and Greed Index plummeted to a score of 10 out of 100, its lowest point since the COVID-19 meltdown, signifying widespread panic and bearish sentiment among investors. Institutional outflows. The decline was amplified by significant capital outflows from U.S. spot Bitcoin exchange-traded funds ETFs, with one of the worst days ever recorded for the products on November 14. Market volatility. Liquidity in the crypto market remained thin, increasing the risk of sharp price swings, which contributed to investor caution. Conflicting predictions. Despite the current downturn, some analysts and firms like J.P. Morgan still maintained a long-term bullish outlook, predicting a price surge to $170,000 within 6 to 12 months, though the short-term outlook was clearly bearish. The visual chart, with its significant red selling candles and the price breaking below key moving averages, directly reflects this negative and cautious market sentiment. This image displays a BTC USD 15-minute candlestick chart along with volume and momentum (MOM) indicators, typically found on a crypto trading platform like TradingView. The data ranges from November 15, 2025, to November 16, 2025. Analysis of the chart. Price top panel. The price of Bitcoin started around $95,800 on November 15, experienced a dip overnight, and then rallied significantly on November 16, reaching a high near $96,930 by 12 p.m. GMT plus 5:30. Volume middle panel. Volume bars indicate the amount of trading activity. Taller green bars show heavy buying volume, while red bars indicate heavy selling volume. There was a notable spike in volume during the November 16 price surge. Momentum bottom panel. The purple line represents the momentum indicator, which shows the speed of price change. It correlates with the price movements, indicating building upward momentum during the recent price increases. General information. Each candlestick represents 15 minutes of trading activity: open, high, low, and close prices. An uptrend for that period. Red candles indicate that the closing price was lower than the opening price, a downtrend for that period. Disclaimer: cryptocurrency trading. This image displays a BTC USD 15-minute candlestick chart along with the Relative Strength Index (RSI) and volume indicators, detailing price action from November 15 to November 16. Chart analysis. The chart provides a detailed look at the price and momentum of Bitcoin against the US dollar in 15-minute increments. Price movement candlesticks. The top section shows the price movement. Green candles indicate a price increase within the 15-minute period, close higher than open, while red candles show a price decrease. Hollow bullet. On November 15, the price generally moved sideways in a range between approximately $95,000 and $96,500. Hollow bullet. In the early hours of November 16, around 2 o'clock to 7 o'clock, the price experienced a dip, dropping toward the $94,750 mark. Hollow bullet. From 7 o'clock onwards on November 16, the price recovered sharply, showing strong bullish momentum as indicated by a series of long green candles, ultimately breaking past the previous local highs to reach above $96,500 by 12 o'clock. Volume. The middle bar chart indicates trading volume. Higher bars mean more intense trading activity during that period. The volume appears high during significant price movements, confirming interest in those levels. Relative Strength Index (RSI), the bottom line graph, the purple line, is a momentum oscillator that ranges from 0 to 100. Hollow bullet. An RSI above 70 suggests an asset might be overbought, while below 30 suggests oversold conditions. Hollow bullet around the price dip in the early morning of November 16. The RSI dropped towards the lower range, but did not go below the traditional 30 oversold level, indicating that while selling pressure was present, it might not have been extreme. Hollow bullet as the price rallied later that morning, the RSI climbed strongly, moving into the upper range and nearly touching the 70 overbought level, confirming strong bullish momentum. Disclaimer: this information is for education. The image provided is a BTC USD 15 meters candlestick chart which includes the True Strength Index (TSI) and volume indicators. Chart analysis. Price action. The Bitcoin price on November 15, 2025, dropped from around $96,500 to a low near $95,000 before beginning a recovery that extended into November 16, reaching past $96,500 again. True Strength Index (TSI). The TSI is a momentum oscillator that uses double smooth price changes to filter out market noise. Hollow bullet in the chart. The yellow TSI line remained below the zero center line for a period but started curving upward significantly around the time the price recovery on November 16. Hollow bullet. A move above the zero line indicates bullish momentum, while a move below suggests bearish pressure. Volume. The volume bars at the bottom indicate the trading volume during each 15-minute period. High volume often confirms price movements or reversals. Key takeaways from the chart. The chart indicates a shift from a bearish to a bullish sentiment during the depicted timeframe, based purely on technical indicators. Bearish sentiment November 15, early November 16. Price drop. The BTC USD price declined significantly from around $96,500 to below $95,000 during November 15 and the early hours of November 16. TSI position. The True Strength Index (TSI) indicator hovered near or below the zero center line for much of this period, confirming strong downward momentum. Bullish reversal after 7 o'clock November 16. Price recovery. Around 7 o'clock on November 16, the price reversed course sharply, starting a strong uptrend that pushed it back above previous resistance levels. TSI momentum. The TSI line curved upward steeply, signaling a significant increase in bullish momentum as buyers entered the market. Volume spike. The increase in green buying volume bars towards the end of the chart period further supported the validity of the upward price movement. Disclaimer: this analysis is based solely on the provided chart and is for informational purposes only. It should not be considered financial advice. AI responses may include mistakes. For financial advice, consult a professional. Learn more.